everyone. I am Amanda Lakin. I'm the Communications and Outreach Coordinator for the Nevada Housing Coalition, and this is our July Lunch and Learn. Our Lunch and Learns are held virtually on the fourth Wednesday of every month from 12 to 12:45. And before I get to today's session, I wanted to remind everyone that yesterday we launched our registration for our 2022 Nevada Housing Conference, Momentum. Space and hotel rooms are limited, so we do encourage everyone to register early. The early bird price is going to be good through September 9th, and the hotel rooms will need to be reserved by September 30th. So I'm going to be dropping a link in the chat to register. We also still have sponsorships open, so anyone who would love to be a sponsor of our conference, I will drop a link in there as well, or you can contact me directly. So if you attended our Lunch and Learn last month, you will know that we celebrated National Homeownership Month. And we had a few organizations that shared programs and services for lower income homeowners, including modernization, rehabilitation, and weatherization. And today we have part 2 of that series, Date the Rate, Marry the Home. Moderating today's session is the affordable housing advocate from the Nevada Housing Division, Nia Girma. Welcome, Nia. Nia is a Chicago native who has lived in Las Vegas for the past 18 years. She has more than 15 years of lending experience and most recently worked as a specialist for the division's homebuyer programs. There, she focused on creating home ownership opportunities for low to moderate income families. Today, she collaborates with stakeholders statewide to advocate for improvements in Nevada's affordable housing landscape. Welcome, Nia. Take it away.
Thank you so much, Amanda, for that very kind introduction. Thank you, everyone, for being here with us today. And I want to thank specifically the Nevada Housing Coalition for inviting me to be a part of this conversation, and also for recognizing the importance of homeownership and the affordable housing conversation as well. You know, this industry, success in this industry does not happen without effective partnerships and collaborations. So I really appreciate all of the work that the Nevada Housing Coalition does to make sure that all of the industry leaders and stakeholders here in Nevada are engaged and connected. So thank you so much for that. As we mentioned, part 2 of this homeownership series is Date the Rate, Marry the Home, what's in the toolbox for home ownership. What's so exciting, I was just sharing with our panelists, what's exciting to me about today's session is that for the past year, 6 months to a year, there's been lots of gloom and doom. We've all heard it. We've all been inundated with interest rates rising, inflated housing prices and costs, cash buyers, all of which can leave our potential home buyers feeling defeated and underrepresented in the market. And today is not the day to be underrepresented. A lot of home buyers, potential home hopefuls, I like to say, over the past year have been so discouraged that they don't even begin the process to know what they're up against. And that changes today, hopefully with this conversation, because we have some really experts in the industry who are here to share their knowledge, share the tools of the trade, give us success strategies to help home buyers navigate through the process and in the process with actual keys to a home. I'm going to go ahead and introduce all of our panelists. They're going to each give a brief survey, a brief presentation about what their organization offers. And then afterwards, we'll have a Q&A session. So please, as Amanda stated, feel free to drop your questions in the chat or put them in the Q&A because we really want to get to you. I'm expecting a very robust conversation today. So without further ado, I am going to start it off with our first panelist, who is Jorge Montoya. He is the father and husband and twin dad. So that in of itself is hats off to you. That has been in the mortgage industry for over 15 years and is passionate about helping families succeed in home ownership. His passion has led Jorge to be recognized as NAHREP's #1 Latino mortgage originator in the state of Nevada for the last 5 years in a row and ranked #9 in the nation for the year 2022. And if you have any experience with NAHREP, you know, that organization is no joke. You have to be serious about helping other industry leaders, partnerships, and also helping families and achieve the goal of home ownership. So to be recognized as top 9, congratulations on that. And thank you. Take it away, Jorge.
Thank you. Thank you, everyone. Very excited to be here, and I'm going to jump right on in because I've got a lot of information and a lot to say here for you. So my name is Jorge Montoya, and today we're going to talk about the state of Nevada's current market condition, and we're going to break it down into three sections. We're going to first talk about interest rates, then we're going to talk about inventory, mortgage rates, and then loan products. So with that being said, let's jump right into inventory. If we could do the next slide, please. So here's what you're looking at. This is from Realtor.com, and it tracks active listing counts. What you want to pay attention to is the two lines. The green line, which represents January through December active listings for the year 2021. And then you also want to take a look at the yellow line, which represents 2022, January through June. Now, what you're seeing is that nationally, inventory of homes increased by 18.7%. This represents 98,000 more homes actively for sale compared to a year ago. Now, this is a big deal because we just exited a time where there was very limited inventory, right? And which limited inventory led to multiple bidding situations, people overpaying for homes, which then rose our values to the current state. And then, of course, then you add rates in there, and then affordability became a really big challenge. Now, some counties saw an even greater increase in this. So, for example, my home state, Washoe County, we actually, year ago, June 2021, we had 392 properties listed for sale. Fast forward June 2022, we had over 1,100. So this is really good news for home buyers because now you don't have this multiple bidding situation. So if you're a home buyer out there, this could be the right time. And then on Monday, one more piece of information that came out from Realtor.com, they did a survey of the top 10 metro areas that were experiencing the biggest activity as far as price reductions. And guess what? Reno, Nevada ranked #1. We're actually seeing 32.6% of current active listings being reduced. Now, to clarify, we're not seeing a 32% reduction in values, okay? This just means that out of all of the listings, 32% of them saw some sort of price reduction, which again is good news to home buyers. So we wanted affordable housing. Well, I think it's coming, but it does come with a little bit of pain. So let's talk about that pain on that next slide. So here's what you're looking at here. This chart talks about the Fed chair, inflation, mortgage rates, and the Fed funds rate. And sometimes we can get some clues on what's happening in the future by looking back in the past. So if we look at the very top, Burns and Volcker, those were the Fed chairmen from the end of the 70s into the 80s. And during their reign, inflation was at 7% and rose to 14%. Mortgage rates followed suit. They rose from 12% to 18%. The Fed funds rate then went up. They wanted to control inflation, so they rose the Fed funds rate from 11% to 20%. And then guess what? It worked. Inflation eventually got under control and it came down from 14 to 5%. But there was a side effect. The side effect was that mortgage rates actually dropped, which was good for homeowners and home buyers. Went from 18% to 12%, but it did come with a price. And the consequence at that time was the S&P dropping 30%, which then led to a recession. Now, let's move forward into the 90s, Alan Greenspan era. Inflation went from 1.75% to 3.5%. Mortgage rates followed suit. They went 7% to 8.5%. Once again, the Federal Reserve used that same strategy. They rose the Fed funds rate from 4.75 to 6.5. And guess what? It worked again. Inflation started dropping from 3.5 to 1%. Mortgage rates also followed suit, 8.5 to 5.5%. And then the same consequence happened again. The Dow dropped by 50%, and then we saw a recession. Now let's talk about nowadays. Mr. Jerome Powell, our current Fed chairman. Inflation started at 1.5, excuse me. Then it went all the way up to 8.5%. And last month in June, it actually went over 9%. I believe it's currently sitting at 9.1%. So inflation is a big deal, and it is definitely not under control. So what happened is you saw us starting the year with 2.5 rates, which is the lowest I've seen, at least in my 15, 16-year career. They went from 2.5 to 5%, and actually they went higher than that. They reached over 6% for a traditional mortgage, and then in the last couple of weeks they've been hovering as high as 5.8, 5.3, 5.5, and they've been staying in that range for the last 2-3 weeks. Now, The Federal Reserve, we've all seen the headlines. They are very focused on raising the Fed funds rates, and they have. And today actually starts their Federal Reserve meeting. And it's most certain that they're going to raise the Federal Reserve Fed funds rate again. It is anticipated that that rate could reach 3% eventually. And there's an 80% chance that they'll do at least 0.75 of a point increase. Now, if history repeats itself, inflation should eventually get under control and come down, which would then trickle over into mortgage rates and come down again. But to be honest with you, I don't know that we're going to see below 3% for quite some time. That was a very unique time. In a normal market, a prime borrower, 740, credit score 20% down, it's very normal for them to pay 4 to 5%. My hope is that we go below 5% because that'll be such a great opportunity in creating more affordability for home buyers. But keep in mind, consequence could be a recession, which there's talks about that, right? So that being said, let's move on to loan products and wrap it up here. So next slide, please. So let's talk about the good and the you decide. When you get into these situations where affordability is a big challenge, now we have to get creative, and sometimes the creativity can be a little bit risky. So let's start with the good. Nowadays, a lot of lending institutions are offering 3-2-1 buy downs, which is a great opportunity for home buyers to get in and have a more affordable payment. So to break it down real simple, if the rate was 6%, for the first year, it's going to be discounted by 3%. So you'll pay 3% the first year. Second year, it'll go up to 4%. Third year, it'll go up to 5%. And then the following year, it'll go back up to the normal 6% for the rest of the life of the loan. What I like about that option is that now you get in and you got some time to have lower payments, but you also have the predictability. You have an outcome. You already know what the final payment's going to be. Another thing that we're seeing is mortgage insurance buyouts. When we talked about seeing a lot more inventory and price reductions, well, the good news for home buyers is now is a time for negotiations. That is something you couldn't do in the last 2.5 years. Monday, I received a contract where a buyer was getting $20,020 for credit for closing costs. So the cool thing with that is we can get creative. Now you might be able to do an MI buyout for mortgage insurance. So you pay a one-time premium through a seller credit for closing costs, and then now your payment could be dropped $200-300 a month, which makes it more affordable. You've also got non-traditional credit score programs. So we all know the traditional credit score system, TransUnion, Equifax, Experian. Unfortunately, sometimes these consumers are being penalized because they don't have the traditional credit score. So they end up paying higher rates, higher fees. Now, thanks to Ricky stands for Residual Knowledge Index. We have so much more data available that now through their banking institutions and some software that we now have, we can track and see their behaviors, rental payments, membership payments. We can actually create a credit history for these consumers so that way they don't get penalized for not having traditional credit. Down payment assistance, I won't talk too much about, but they are a big role in this economy. I know Diane's going to talk a lot more about that. And then you've also got bank statement programs coming back, which are great for self-employed people that maybe their tax returns aren't really reflective of their net earnings. And then we've got the you decide. So we've seen this before, right? When affordability comes a problem, you want to provide consumers with lower payment options. So now you're seeing the resurgence of interest-only loans, adjustable rate mortgage loans, 40-year term loans. Now, I say you decide because I'm not for or against these products, but I do believe that they're designed for a smaller group of people. So to give you an example, I've got a client right now that is getting an adjustable rate program. However, she's in a whole different situation, 30% down and very strong cash reserves. So somebody that's in that position, an interest-only and adjustable rate mortgage may not be a bad idea, but if you have a first-time buyer that's getting gift funds for a down payment, that may be a more risky option for them, which is why I like the 3-2-1 buy down option over this for them, because it's more predictable, less risk for the consumer. So that's all I got for you. Any questions, please let me know. Thank you so very much. And back to you, Nia.
Thank you so much, Jorge. That was great information from the beginning to the end. I think it's important, some takeaways here, and we'll get to some questions later, but the market is changing. There's more inventory available, there's products available, and there are definitely some shifts with interest rates and inflation. So thank you very much for sharing. And then one takeaway that you can have, because I know that there were a lot of products that were mentioned. And one thing I always like to say, whether you're using a down payment assistance product or not, you always want to make sure that you are working with an informed lender who has your best interests at heart. It's great to know all of the programs available throughout the state that you can use, but having a lender who understands your unique situation and being able to craft a program or a loan program specifically for you is key in this market and in every market, honestly. So we're going to move right along, since we did mention and tease a little bit about our down payment assistance programs, and we're going to meet our next speaker, which is Diane Arvizo. Diane is a country girl at heart, raised in Southern California dairy farm. Diane not only embodies the work ethic and values of small town America, but she is committed to supporting the rural lifestyle throughout the leadership at Home at Last homeownership programs for the Nevada Rural Housing Authority. Diane joined NHC as Director of Homeownership Programs in 2015 after serving as single-family housing specialist at USDA Rural Development. With an A to Z understanding of the home buying process, Diane believes homeownership programs should be designed to meet the changing market conditions and a community's evolving needs. Thank you so much for joining us, Diane. I can't wait to hear what you're going to share.
Thank you, Nia. Appreciate the warm welcome. And of course, the tie to my rural roots. It's definitely near and dear to my heart. So I'd like to kick us off, and Jorge, thank you for setting us up with a nice kickoff with the market conditions that we're seeing today. So I want to tell you first about Nevada Rural Housing Authority. So Nevada Rural Housing Authority launched the Home at Last program, which you see on your screen, 16 years ago this year. And since then, we've helped over 10,000 rural home buyers with $2.2 billion in affordable financing. We've provided over $63 million in down payment assistance to our rural home buyers, and $36 million has been saved through federal tax credits. And more, I'll tell you more about the federal tax credit program in a moment. So our Home at Last homeownership programs provide down payment assistance. That's a word everybody knows, right? And everybody loves. The mortgage tax credits that save people tons of money. Low rate mortgage options for those who don't necessarily need down payment assistance, and homebuyer education. Through those programs, we're able to help people achieve successful and sustainable homeownership, which is the key component to economic development, which we all appreciate today. Nevada Rural Housing Authority recognizes the tremendous value in working together with our local communities and our lender and real estate professionals across the state. We have a commitment to helping ensure every Nevadan has a home they can afford, which is part of what makes rural Nevada such a great place to live. We have a lot of our local partners on this Lunch and Learn today, so shout out to all of you. I saw a few names I recognize, like Kristen. So next slide, please, Nia. So as we jump into the Home at Last program, we have this fun little graphic that our comms department put together, and the 150 is really intended to tie the area that we serve is all communities with population under 150,000, and that our income limit for the program is also 150,000. So we call that HOW 150. And if we didn't have so many people on the call, I might give a quiz on what does HOW stand for. So since I can't do that, I'll just tell you, anytime I reference HOW, maybe by accident or intentionally, that stands for Home at Last. So I would encourage you, when you adopt a puppy through our How Pals adoption program, you might consider calling it HOW. So at Nevada Rural Housing Authority, our mission is to promote, provide, and finance affordable housing opportunities for all rural Nevadans. How do we do that? Well, we're operating under the oversight of a board of commissioners appointed by the Nevada Association of Counties and the Nevada League of Cities and Municipalities. We have an awesome board who supports our ability to serve our mission. I'm going to take you to the next slide so we can jump into really what are we all about. So renters who want to purchase a home that they can afford in a community where they live, work, and play have certainly been faced with extraordinary challenges. Rising rents definitely restricted already tight budgets, making it impossible to save for down payment. Limited inventory that Jorge talked about, especially those with affordable price points, were coupled with skyrocketing home prices that rose at an unsustainable rate. We're starting to see some of that cool off now. And that's when our home buyers can poke their head up and look around and say, maybe now is my turn. Maybe now I don't have to fight off all the cash buyers. Maybe now I can afford the home while I've been stuck in this high rent home. So for qualified home buyers, especially those who have income that has been steady, they're really in a nice position right now to take a look at what the programs can offer. And again, as Nia pointed out, work with the professionals across the state to find out what they qualify for. And so we'll dive into that in just a second, but I want to just hit these bullet points real quick about the Home at Last program. We're really tailored to provide assistance to those who struggle to raise the down payment or save for the down payment because their budget is already tight. With inflation the way that it is, certainly they're seeing a tighter budget than they ever have before. So this is an opportunity for home buyers, and not just first-time home buyers, those who have already purchased a home in the past maybe, or are re-entering the housing market, to jump into home ownership. We require only a 640 minimum FICO score, but we require homebuyer education, which I'll touch on in just a moment. It is okay for borrowers to own other property, which is beneficial for those who are moving to Nevada to take an opportunity of the employment that's here in Nevada. The down payment can also be used for closing costs. And the debt to income ratios, I hate diving in the weeds, but really when our home buyers meet with one of our participating lenders, they go over all of the lending requirements. They have to meet traditional underwriting requirements for financing. That includes debt to income ratios. I have an awesome program I'll tell you about in a second that helps with the debt to income ratios. So how are we addressing these challenges? We are experts at bridge building, and I don't mean bricks and sticks and asphalt. We build homeownership programs to meet home buyers where they are. Down payment assistance is an area where we can provide flexible financing solutions. And as I mentioned, it can be used for closing costs. With the 4% Advantage program that we kicked off, and I'm going to tell you about that in a minute, we cover enough down payment assistance to, like for an FHA loan, it requires 3.5% down. Our assistance can cover all of that down payment, plus a little extra for closing costs. So it's a really sweet option. The program has to be used to purchase a primary residence, which is the whole purpose of helping, especially first-time home buyers. It can be used also for those who want to refinance their home to make sure that they can maintain maximum affordability. I will tell you one cool thing about using a housing finance agency for financing is that a borrower with a 640 credit score is going to get the same interest rate as a borrower with an 800 credit score. That's because we publish the rates, and anyone who qualifies for the program is going to be treated the same in terms of the pricing for the loan. That really helps our lower credit score borrowers to be able to afford the same amount of home that someone with a higher credit score would be. So lenders across Nevada who participate in the Home at Last program are going to actually determine the eligibility, as I mentioned. And as a local housing finance agency, we also offer an added benefit for home buyers that earn at or below 80% of the area median income. In partnership with Fannie Mae and Freddie Mac, our conventional loans can provide reduced mortgage insurance premiums by almost 50% to make mortgage payments significantly lower. We'll jump to the next slide, Nia, where I'll talk about our 4% program that's just came out. On July 18th, we launched the Advantage program that provides 4% down payment assistance on a 30-year forgivable term. And what that does is, if let's say, for example, the home is $345,000, the 4% is $13,800. They'll be able to use that to cover the down payment, and again, a little extra for closing costs. It does come with a 30-year first mortgage. So when they use the down payment assistance program, the home buyer gets a 30-year fixed rate mortgage at the rates that we publish on our website at howrates.org, H-A-L-C, there it is, howrates.org. And with that, they get a second mortgage for the down payment assistance that doesn't have any interest or payments on that. It's just forgiven at the end of the 30-year term. So we are really excited about the 4% Advantage because as we see the home prices cooling off, we're seeing more home buyers in the rural areas that we serve actually being able to afford a home. The rate today, we actually brought back one of the assistance options we hadn't had in a while, which is the 3%. And what that's doing is it's really giving borrowers more flexibility. And so we're really excited that loans can kind of be customized to the needs of the home buyers. And that's a job that, again, our lenders will sit down and talk to the buyers. Jorge's an expert at that. All right, we'll go to the next slide. One of my favorite, inflation busters. So let's talk inflation busters. What the heck is that, right? Everybody's impacted by inflation, but this is how we roll. Over here at Nevada Rural Housing, I want to tell you about the Mortgage Credit Certificate Program. We call it MCC for short, which is much easier. To maximize affordable homeownership for every rural home buyer, we offer this exclusive program to first-time home buyers and qualified veterans. You might be asking, what the heck is a mortgage credit certificate? I could tell you that it's a dollar for dollar federal tax credit, but that doesn't demonstrate the full impact of the MCC. So let's go to the next slide for a true-to-life examples. A first-time home buyer financing a $345,000 home at 6.5% interest would receive an additional $371 a month in additional qualifying income. That's a real inflation buster. That's helping them with more purchasing power. It's helping them qualify for the financing if their debt to income ratios are a little bit high, because that additional qualifying income will lower it. That's particularly helpful for those carrying student loan debt. So for every first-time tax-paying home buyer, I'm going to say they need to get the MCC if they qualify. They can even pair the MCC with the down payment assistance program for maximum affordability. So we'll jump into the next slide. So homeownership strengthens local economies and helps to create thriving communities where Nevadans can live, work, and play in the community they call home. To create more successful homeowners, all homebuyers must complete homebuyer education to participate in our programs. Our proprietary award-winning education platform called Home at Last University provides 24/7 online training for the homebuyers so they can be educated anytime they want, and also our lender training and our real estate professional training where they can be certified as an expert in the program. Homebuyers wanting to purchase a home with the help of Nevada Rural Housing will have to establish, or I should say, will be recommended to get connected with trusted and a robust network of participating local lenders and real estate professionals like Jorge. He's on there. He knows his deal. And we would just encourage homebuyers, if they come to us to talk about the program, we're always going to answer all the questions they have, but it's truly our network of partners that help deliver the program to homebuyers. So we'll go to the next slide, and I'll just say, this is the warm fuzzy time. We have an award-winning program called How Pals Pet Adoption, and it is literally that. So every homebuyer that uses the Home at Last program can go to their local shelter in their neighborhood after purchasing a home, and Nevada Rural Housing will pick up the adoption fee for their little fur baby to go home to their new place. A lot of renters may seem like a big fluffy deal, and it is, but the true essence behind it is that a lot of renters can't have a pet when they're restricted by, lease restrictions. And a pet can change a home for the better. And so that one of the first things they like to do is go out and get a fur baby or a furless baby. And we love to make sure that they're adopting from a local shelter. So we'll go to the next slide. And I'm just going to say we're rolling so fast here at Nevada Rural Housing. You need to just follow us on our social channels to keep up with what we're doing. New information is coming out every day, kind of like what Jorge said and what Nia said. We're going to rely on you, all of you that are on there today, to go out and make sure you're telling future home buyers about the programs that are available. You're going to learn a lot today, but we really want to encourage them to go to the source of where information is accurate. That would be the local housing authority and the state agency, so Nevada Rural and Nevada Housing Division, and then also talk to any lenders who are participants in the program and experts to make sure that they're getting accurate information about how they can become a homeowner. So I'm going to turn this back over to you, Nia. Thank you.
Thank you so much, Diane. Thank you for all of that information and sharing with us and all that you're doing to help our rural Nevadans be able to achieve the dream of home ownership. I am going to pass it on, last but not least, to our next participant, our next panelist, Miss Rhonda Tolbert. In her professional career, you could say that Rhonda Tolbert is a customer service majored in customer service and minored in housing. Her roles in mortgage modification, hospitality, banking, social services, title, and escrow have perfectly prepared her to serve as the Home is Possible program specialist. And I must say, she's been a breath of fresh air down here in the South Las Vegas office as well. Her current community outreach and education role makes her a good use of customer service skills that she's honed over the years in helping people navigate the challenging issues they face. Her reward is knowing that programs she shares with her community help hardworking, low and middle income Nevadans otherwise who may not be able to get a home and become homeowners. Thank you so much for joining us, Rhonda. Thank you for being here in the Las Vegas office. And please share with us the programs that you have here for all of our Nevada constituents.
Thank you so much, Nia. And thanks to the Nevada Housing Coalition for inviting me. Today, I'd like to talk about Nevada Housing Division's first-time homebuyer program. We'll go to the next slide. And it's available statewide, which is really nice. It provides up to 4% down payment assistance that can be used towards the down payment or the closing costs. And I know that Diane touched on it briefly, but putting that into perspective, with a loan amount of $300,000, a borrower would receive up to $12,000 to help with the costs. So today's rate is currently 5.875%, which is very competitive. The assistance is forgiven after 3 years, and that's prorated, meaning a portion of the funds from the down payment assistance are forgiven every month you're in the home. And just like Diane had talked about earlier, it's your primary residence, and you want to be a first-time home buyer with ours. So on the next slide, you'll see the program requirements. And I also put on there the education course that's highlighted there because the certificate received after attending is good for 1 year and is required for the program. With ours, again, you want to be a first-time home buyer, your minimum credit score of 660, and the home must be your primary residence, as mentioned earlier. On the next slide, I've included the maximum household incomes, as well as the maximum purchase price. Here I've listed Clark and Washoe County, but I want to point out that the amounts are different and available in every county for the state of Nevada. And all those amounts are listed on our website. I believe that our program is unique and hope that everyone takes advantage of the benefit and savings that our program provides. And I have our information also in the link, so you can always reach out for any additional information. But in a nutshell, this is a great program, especially with the fact that it's forgiven after 3 years. And I'll pass it back to you, Nia. Thank you so much.
Thank you so much for sharing, Rhonda, and thank you everyone for all of the information. If I can take a couple of takeaways from Nevada Housing Division, it looks like there are still programs available. Those programs cater to low and moderate income families, and I think this is a perfect combination of panelists to share that the market is shifting. There's products available, there's down payment assistance available, and there's education available. So I am going to open this up for question and answer, but I am going to kick it off with a couple of questions I just have for my personal edification. I'll start with you, Ms. Rhonda. If there was one takeaway that you could share with us for home buyers who have been in this situation for the past year and a half, potential home buyers who perhaps just don't feel that they have what they need to be able to be competitive in this market, even though we do recognize the market is changing, what would your advice or suggestion be to home buyers in that situation?
I just want people to know that it's best to just stay ready so that when the opportunity arrives, then the shift occurs, just like Jorge was talking about, that you'll be ready and prepared to purchase your forever home. And with that, that's where the home buyer education course comes into play, because when you have the tools that you need to be prepared to make that move, you'll be ready. And that's what the homebuyer education course does. It gives you those tools to put in your toolbox. It tells you where you should be financially, how much house you can afford, and things of that nature. So I just want people to know that it's always a good time to be ready and to stay ready, so that when that shift occurs, like Jorge was showing, that you'll be ready to just jump in the market and get your forever home.
Thank you, Rhonda. And mentioning Jorge, when the shift occurs, so you've shared with us a lot of information, and I know that some people, it just may be like drinking from a water hose, but in general, what do you think our general home buyer needs to know about today's market, today's products, and how they can best prepare themselves to get into a home?
Great question. So I think the main thing that home buyers need to be aware of is that right now is a good time to negotiate. There are new opportunities. For the longest time, we were complaining about not having inventory and having to overbid. Well, guess what? You don't have to do that anymore. That's really good news. And like the title of our session is Date the Rate, Marry the Mortgage. You get into real estate, right? This is a long-term goal. You get in there, and if your rate was 5%, 5.8, 6%, whatever it was, it's very unlikely you keep that mortgage for 30 years. And those of us that are homeowners, even me personally, when I got in 2011 with an FHA loan, I had that loan for 3 years because guess what? Markets changed. I built up some equity. I was able to refinance, drop my payment, drop my mortgage insurance. So this mortgage you get now is not your forever mortgage, but it is the vehicle that can lead into something different for you.
Thank you. Thank you, Jorge. And I am going to throw this question out. I believe both the Nevada Housing Division as well as Nevada Rural Housing Authority offer a homebuyer education. But one of the questions from our audience today is what organizations in the state offer the homebuyer education certificate? And do the income limits change for the assistance program or the limits of the housing costs? I will let you take that, Diane.
Thank you, Nia. So homebuyer education through Howell University is offered right through our website. So that would be homeatlasteducation.org. Our education course is designed to qualify borrowers for our program to meet the requirement for homebuyer education. Nevada Housing Division has a homebuyer education course in partnership with Freddie Mac called Credit Smart. That course is acceptable for both Nevada Housing Division and Nevada Rural Housing Authority because they're both addressing all of the key education components that we want. But more importantly than what both the division and the Housing Authority offer is the HUD approved courses where a home buyer is going to spend hours in a class, at least 6 hours, training on homebuyer education. And that is actually the preferred route. So there are HUD providers for homebuyer education all across Nevada, and there are several resources directly online. So I would just ask anyone who wants to get like a list of those, they can either Google search it, it's listed on the HUD website, or they can contact Rhonda or myself. We'd be happy to give them that list.
Thank you so much, Diane. Rhonda, did you want to share any information about our homebuyer education?
Only that, we have it accredited. And what's really nice about the homebuyer education is there's no cost for that. So when you go onto the website, when you click that link and you sign up for it, you can do it online. We also have a live webinar that's taking place today from 4 p.m. to 5:30 p.m. where once you've attended it, you will receive that certificate electronically. And as mentioned earlier, that certificate is good for 12 months. So that gives you plenty of time to maintain that certificate and be prepared when the market does do the shift.
Thank you so much. Do we have any other questions? These are great, by the way.
Nia, I would love if I could just for a moment to address our awesome theme. The date, the rate, and marry the home, I think is such a, of course it's catchy, but also when you think about someone who's buying a home, this is their primary residence. This is often their first time jumping off point to starting to build wealth for their family. This is like the entry point to changing their stars. They're not locked into a specific mortgage rate for 30 years where they are locked down and can't do anything. As the housing market ebb and flow changes, the rates go up and down, and the refinancing opportunities always come around at different points and for different reasons. And so a homeowner, once they're in the door, they can kind of control their housing environment, if you will. The rates are locked, so they have guaranteed payments. They have the ability to create a home that is tailored to their family's needs in a place where they want to raise their family or work and live and play. And I think that the interest rate phobia that people are having right now is a barrier that we really need to kind of communicate as it is just part of the opening the door process. It does not mean that they're going to forever be paying more for a home. They're getting in the door. If they can afford the payment on the higher interest rate, great, get in the door, get into home ownership, and then let the market do its thing. And eventually you're going to be able to refinance. And when eventually the rates come back down, which they always, go full circle. So I think that's a message that, the media certainly doesn't always favor the housing market conditions when they want to, draw attention with their headlines. But we love Date the Rate, Marry the Home, because in essence, that is exactly what they're doing, is they're committing to the home, not the rate.
Thank you. That's so true. Thank you for sharing that, Diane. We do actually have a couple of questions in the chat. One is that the program that Rhonda mentioned, so our first-time home buyer program, I believe specifically, the question is, are there any caveats that it cannot be layered with other DPA if the borrower may be able to access? Do you want to take that, Rhonda, or shall I?
Well, right now there's no layering with it, but yeah, you can go ahead and take it to expand on it a little bit more. But as far as I know, there's nothing to layer it with at this particular time. We're not going to, we're not going to subordinate to any other, loans. We will maintain that second position.
And that's correct, absolutely correct. With our first-time homebuyer program, because of the source of those funds, there are layering restrictions for that program specifically. There are other programs within the housing division with the Nevada Rural Housing Authority and within the state as well that you are allowed to layer with. There are specific rules about subordination. And with that, speaking of other programs, we have another question for you, Ms. Rhonda, and it says, with the Home Means Nevada initiative, how is NHD envisioning any expanded down payment assistance programs or other homeowners assistance programs?
We do have something that will be coming down the pipeline, and we'll put that out once we have it developed and ready to put out. So right now we don't have anything at this point, but we do have the funds. We have been approved for the funds, but once we get an idea of what we want to do to streamline the product, we'll be putting that information out as soon as we have it.
Absolutely. And just to expand on that, yes, the Nevada Housing Division, the Home Means Nevada initiative, there are funds available for home ownership process, but the Nevada Housing Division is in a unique situation where we have to apply for funds just like every other organization within the state. We are completing those steps and completing that process to make sure all of our I's are dotted and our T's are crossed. And then also, we have another question. Can Nevada Rural Housing Authority be paired with Nevada Rural Development Corporation's program?
Yes. So Rural Nevada Development Corporation offers up to $10,000 for borrowers to help with their closing costs. That has been paired with the Home at Last down payment assistance program successfully. Rural Nevada Development Corporation has been willing to take a third position for it's a silent for theirs as well. So we still maintain a second position for our down payment assistance, or they can use our unassisted product just for the below market rate and use the Rural Nevada Development Corporation's closing cost program as their added assistance. There's too many associations or organizations with rural and Nevada and development and housing.
Quite a few tongue twisters for sure. And then I do also have a question I can answer specifically for the housing division, and Diane I'm sure can answer as well. Someone looking for one-page flyers with information, just a one-pager with our information that they can share with potential home buyers. We absolutely have it. Angela, I grabbed your email out of the chat. I will send you a link to the one-page flyers that are customizable that you can create for Nevada Housing Division products. And I believe Diane has something as well. Okay, well, we don't want to keep all of your lunch break. We are going into about a minute over here. But one of the great things that, as Diane was mentioning with our Date the Rate, Marry the Home, it's an awesome thing for so many reasons that this rate is not forever. You being a homeowner is forever. Always having a home and having that piece of equity and options to give you the option to promote generational wealth for your family and make sure that you are have roots in where you work and play. So with that being said, we have some wonderful matchmakers here, and I believe we have some information to share with you so that you can get out again and start flirting, start dating, get ready to get married with all of the matchmakers we have here to help you find the home of your dreams.
And we will be sharing a copy of this presentation to everyone who is registered today for the webinar. Okay.
Oh, one quick question I want to put in there that someone asked about moving to Nevada. There is no residency requirement or restriction with the Nevada Housing Division programs. You have to qualify for a standard mortgage, so mortgage financing, which maybe Jorge could, if you want to touch on really quickly how that works, but you don't have to have a Nevada ID and proof of residence for 6 months or anything like that to qualify for the programs.
Yeah, definitely. Generally, you want to have a 2-year employment history, but it doesn't have to be with the same company, right? Similar line of work is ideal, but if you're moving from one state to the other, as long as you've got similar pay, meaning like per hour or salaried or commissions, then that can be used, and you don't have to be at the job for a year. You could be there for a month, as long as you have less than a 6-month gap between your jobs.
Thank you so much, Jorge. And then and how that ties in with the residency requirement restrictions. Of course, if you're moving from California, you have to have a job that proves that you are purchasing a home here as your primary residence. So you can't necessarily have a job working at the mall in California and qualify to purchase a home that you'll live in full time here in Nevada. Those two things just don't make sense, but there is no residency restrictions or requirements. Thank you so much, everyone. Thank you for all of this information that you shared. And thank you to our audience for being such a captive audience and keeping us engaged. I knew this would be a robust conversation. I'm inspired. I hope that you feel empowered to get back out here in this market and be able to reclaim everything that is owed to you, your opportunity for home ownership, and be able to share this information with potential home buyers. Have a great day, everyone.
Thank you, everyone.
Thank you. Have a good one.